Morning, everyone. Just checking you can hear me and see the screens. Okay, see the video. Thank you, Gordon, to the point. Thank you, John, Jackie. Nice to see you, Jackie. Florin. Nice to see a few people, I'm assuming back from holiday. Back in the game. Back in the game. And what a time to come back in the game as well. Right, okay, let's get going. Right, now, contagion is the key, isn't it? Turkey, political risk, trade tariffs, EM, emerging market exposure, it all sort of ties in together. And it certainly has sort of affected the dollar. The dollar is the go-to currency, isn't it, at the moment? It's also affecting the last few days as this sort of contagion has started to pull through. Volatility has picked up, certainly on US equities. Now, the issue would be if you start to see volatility rising as equity markets stabilize and start to also rise. So that's what we need to look out for, because that's what we saw through January. That was equity markets rose through January, and then we also had volatility rising. Now the fear is obviously summer trading, thin markets, volatility is rising, then you could certainly give way to an explosion of action, and that would probably be a sell-off. So we need to be careful of that. Now, dollar broke out Friday. Look at that. Now, that breakout on Friday, euro dollar driven, certainly. The drive down below 15, big figure on euro dollar. Key support broken. That now completes a big top pattern. Anyone who's been reading my watching my videos or reading my morning report will know 15 big figure. That's a 350 pip range breakdown. That implies 1150, but you sort of open this out. Yeah, massive head and shoulders top pattern. People sometimes complain about technical analysts giving these patterns names, but anyway, the psychology certainly behind that move, I think, is that we've had a big run higher, big rally, we've seen a retracement back to test a support level that tested that support on several occasions, and then bang, that support's gone. So we're now in a bear phase, and I think that looking at the momentum indicators, that is the concern for me, is the MACD lines here rolling over at neutral. The RSI under 60. So it would all suggest selling into strength on euro dollar. So anything around sort of 14 to 15 area, I think it's likely to be the next source of the next selling opportunity. So yeah, we have seen euro dollar breaking down, but that's not the only thing, is it? Cable. Look at cable. That is if you're, oh God, dear, if you follow politics at all in the UK, Brexit is a complete disaster. And well, I say that. It seemingly is the progression towards Brexit, and how they're handling the progression towards Brexit is the disaster. Whether your politics says you want Brexit or not, I think you can all agree that how the politicians are handling the process of Brexit is pretty disastrous. So it's not great, and subsequently sterling is under pressure, and that I think is going to continue to be the case. The next time that could potentially change, I think is mid-September, late September, 20th of September is the next time the EU Council meets to discuss Brexit. And I think that's the next time you're going to really get any real suggestion that Brexit might be a positive outcome. So until that happens, you're going to see negatives of Brexit, and subsequently we're going to see sterling under pressure, I think. And you look at the fact that sterling has, I mean, that was the Bank of England rate hike. The Bank of England hiked interest rates by 25 basis points. You think about in the context of how the Bank of England rose interest rates, unanimous vote. Even though in the minutes it went on about all the risks to the outlook, it went on about contagion from the trade fears, how the global economy was sort of starting to roll over, and yet they've increased interest rates unanimously, which is a real concern actually when you think about it, that no one on the committee was really sort of questioning that view. Anyway, so subsequently, we've seen the market really questioning that rate hike, and we've seen sterling falling off a cliff. Not off a cliff, that's a bit much, but certainly 8 sessions in a row down. Not great. So that's sterling for you. But what we have got at the moment is this contagion potential from Turkey. First of all, where's my mouse? Second of all, where's my lira chart? Stabilised a bit today. Stabilised a bit. And that's helped to sort of stabilise sentiment generally on markets this morning. Equities especially have found their support. And we've seen that we've bounced. But that bounce seems to be pretty short-lived. And that is interesting because DAX back below 12,400 again. That's a potential trade that I'm going to talk about today. Here we see the DAX, which broke below 12,493, 12,400. These two red lines here. Those old supports become new resistance. Gives you a sell zone of around about 12,4 to 12,5. And the rally today has, interestingly now has filled the gap. The gap was at 12,396. Earlier on this morning when I wrote my DAX analysis on the website, it hadn't filled the gap. It has now filled the gap. Whether it now closes the gap is the issue. If it closes below the gap, then that certainly, having sort of unwound from 12,460 and losing sort of 80, 90 ticks from the high, that would be pretty negative. I think that would suggest that that's a rally that gets sold into. Look at these momentum indicators, MACD lines accelerating lower, stochastics accelerating towards negative territory, all sort of points towards probable retest of the lows. And I think that earnings season is an issue. Earnings season tends to be supportive early doors, and then we see a sell-off. I'll just looking at the fact that let's take the quarterly months of March, June. Not March and June. End of May into June, we saw the DAX basically struggling all those sort of 6 weeks, and those are the 6 weeks that effectively you don't really get earnings because that's earnings season done. We're now sort of coming into the back end of August, and we've already lost the traction in that earnings season rally. So yeah, it really concerns me, that doesn't. If the Turkey contagion continues, Turkey remains under pressure, then markets are going to remain under pressure. If China remains under pressure from the trade tariffs, then markets are going to remain under pressure. So I think that this is all sort of playing into the same sort of same theme here. So DAX potential selling, I think, is an idea. So yeah, equity indices turning corrective. Now we've got here yen strength. It's paused a bit today, and you can sort of go through some of these yen pairs that you see the selling or the yen strength has just sort of unwound a touch. A little bit of bounce on euro yen. Dollar yen's the main one really, bouncing, but it's still in that downtrend, and you've still broken that uptrend. So I'm still a little bit concerned about dollar yen, even the fact that we are trending lower. I think dollar yen is more of probably a consolidation ultimately. I don't think it's going to pull drastically lower, mostly for the fact that I think that at some stage they're going to the Turkish lira situation will probably be handled in a better manner, and Turkish lira will stop plummeting. Subsequently, we're going to see the yen sort of just the safe haven bias of the yen sort of starting to come out, but ultimately the yen is performing better as JGB yields have picked up. Just trying to look for my JGB yield chart. Is it that? Yes, it is. So you go there. So you've seen. Oh no, wrong one. That one. Please tell me it's that one. No, it's not. Annoying. That's the one. Right, okay. So JGB yields is still above 0.1%. Yeah, they're sort of still there, and I think they're still supportive to an extent of the yen strength at the moment. Sterling yen's another one. A little rally, but I think that rally is going to struggle. It really is going to struggle, certainly considering how weak the euro is, how weak the sterling is. 143.15 was that breakdown level. That is your natural line of resistance. Overhead supply starts to kick in, and I think that that's where you'd start to see the market falling over again. Aussie yen broke down below the support at 80.50 yesterday, not on a closing basis, I might add. And the market is just sort of hanging on again today, but just looking at the outlook, where you've got the moving averages all falling over, and sort of you've got this run of lower highs. I'd say you'd be looking for the next selling opportunity. Again, this is sort of in line with the fact that you've got yen, which is performing better. Aussie and Kiwi don't seem to be doing well at all at the moment, and I'd be concerned. I did Aussie dollar in my chart of the day today on my morning videos, and I sort of look at this and think, wow, that is not great. You've got the downtrend. You've got just a string of lower highs continuing. Lower highs, lower highs, lower highs, lower lows all over the place. Consolidation gets sold into, consolidation gets sold into. We've just broken the 73.10 mark. That becomes a basis of overhead supply. You've got a nice sell zone here, 73.10 to 73.50. And within that, I would say that anything around 73.10 is a chance to sell. So I would say that that is your selling opportunity if you get the sort of unwinding move. And within that, oh crikey, look, euro yen. That's the one I did last week. How did euro yen work out? Well, I missed it by a handful of pips. Where is euro yen? Handful of pips at 129.10, I think it was. Yeah, missed it by a handful of pips, and it just plummeted. Oh well, we move on. So yeah, I was going to do. Yeah, I mean, that's not a trade anymore. Can't really have that. So I was going to do Aussie dollar, wasn't I? Aussie dollar. Yeah, 73.10. I mean, I think that is a sell zone between 73.10 and 73.50. Anything that unwinds into that, I think, is your opportunity there. So let's put Aussie dollar. It's always a challenge, isn't it, finding them? Why is it I can never see the ones that I want? It's probably because it's quite obvious. So we do execution. No, we're going to do a pending order, and we're going to do a sell limit, and we're going to do at a price of 73.10, and we're going to do a target of 0.7140 and a stop loss. That's well, that's 160 pips. So, I mean, in an ideal world, you've had you'd be selling probably around 73.50 with your stop above 74.50. It's probably a bit, I mean, it's a bit wide. So you'd say above 74 figure, just do that. I mean, it's a little bit arbitrary. There's no real level at that point, but 0.7405. Okay, so just reading a couple of your comments. Right, okay. Where are we at? Oil. Yes, we don't often talk about oil. 67 on WTI is, and you say holding. I mean, it's intraday. It's breached that a few times, but it's just this run of lower highs that worries me. You've broken the uptrend. You've got momentum indicators which are certainly edging bearish, and you've got this continued pressure on that support. Similar story on Brent crude, 71.30. Sort of still running this string of lower highs. It's not decisive selling pressure, but the fact is that you've lost the bull trends of these oil charts. On both WTI and Brent crude, you've now broken the uptrend. So that gives rise to the fact that you are edging towards a possible correction if you get the closing breach. I think 67 would certainly on WTI open that key low of 63.60, which again is a bit of a pivot area. So 67 is your key level to watch on a closing basis, I think. And again, you've seen the market sort of attempt to the downside in the last few days, last 4 sessions actually. We've sort of breached that 67 pivot. But yeah, it is still hanging on arguably, but I think a closing breach would put you under pressure. So you could argue sort of selling into strength still on oil. And the reason being, I mean, like the trade tariffs, you got China data coming out today. That China data that we saw this morning was not great, was it? I mean, industrial production lower than expected, retail sales lower than expected, fixed asset investment lower than expected. And that all sort of plays into the fact that China is potentially again being impacted by a bit of a slowdown. It's not drastic, but Chinese market slowing down doesn't do well for oil demand, and you've got the continued sort of to and fro on oil demand and supply, which are creating this choppy market in recent weeks. But there is this, as I said, trend of correction. So generally speaking, what are we looking at? Dollar. Okay, I'd be dollar positive against all these. Dollar positive against Kiwi, Aussie, Euro, and Sterling. I've talked about Euro. I've put a trade on Aussie dollar, selling Aussie dollar, and the Kiwi. I mean, just looking at the outlook from the RBNZ the other day, it was really dovish, like pushing forward rate hikes into 2020. That is really dovish, and the market is obviously having to sort of cope with that amidst a strengthening dollar. Euro sterling. Now, I did look at this the other day. I mean, because I talked about this on Thursday when the market was way above 90, and I said, well, anything around 89.50. At the time, I said 89.50 to 90. Anything around that is likely to be around about where we start to see some support coming in. In the event we started to see the contagion flooding through from Turkey and subsequently the euro got hit. Interesting that it's back to the uptrend support today, and you've seen these indicators all unwinding towards levels at which they have been in the last sort of month or so. So if you do start to see euro building that support, and it seems as though it may well have done, is that a buying opportunity on euro? I'd want to see probably more confirmation of support, but I think that's interesting. Euro sterling. Japanese yen I've spoken about. DAX I've looked at, and in fact I do sort of look at this DAX, and as I said, the fact that we're sort of entering in, beginning to sort of wind down earnings season leaves me a bit cold on the DAX, and I'm not sure about it. I think anything around that sort of 12,500 with a stop above 12,600 would be an ideal trade, but I mean already the market's fallen over here. So if we do see the market closing that gap this evening, and by closing that gap I mean the gap was at 12,396. If you see the market closing below that, that closes the gap. and that would be a very disappointing move from the DAX. And gold, oh my goodness. I really looked at gold and I was thinking, I was getting some good vibes off gold middle of last week as it was starting to perform better. You were seeing a dollar strengthening, but you were still seeing gold supported. And that was giving me good vibes on gold. And then yesterday, absolutely smashed on gold. And you didn't really see a dollar strengthening move yesterday, and you didn't see and you did see safe haven trading. Two things that should be gold supportive, and yet gold had the biggest bear candle that we've seen since middle of June. And sort of breaking 1204.50, that's not great, is it? So you'd be selling into strength still on gold. All these consolidations continue to be sold into. So it's a real disappointment you've got on gold. And yeah, it looks like still further downside. And what's the downside? Well, 1180 is the next support. I mean, it's held, you can argue it's held 1194.50. It didn't really. It actually closed below that. And then below that is 1180. I can't get the crosshair on it because it doesn't work. But if you breach 1180, what are you looking at? Well, big low 1122. But look at the context of this move. Seeing this uptrend broken, you see the market sort of pulling a new downtrend, confirmed on all the momentum indicators. It does not, and oh god dear, it does not look good at all for gold. So yeah, lots going on again, always. I always say that, don't I? Anyway, so yeah, generally speaking, I think sterling is a sell into strength, and I think that is key. I think the dollar is still strengthening. There's further room to run in that dollar. Euro's weaker, sterling's weaker. Yen seems to be performing okay. DAX, yeah, anything that increases the trade fears and Turkey worries, DAX negative. And gold doesn't seem to be doing it at all. Seems to be a real worry about the way that gold is moving. So there you have it. Lots to ponder as well. Thursday is when we're again together. Yeah, with that in mind, I wish you all good luck in your trading, and I will speak to you on Thursday.